Hey guys, welcome to today's daily report from Ready Set Crypto. So today we're seeing a field of green. It's always a great sight, and the crypto market cap has breached 600 billion for the 5th time this month. We'll likely continue to see the market go sideways and maybe slightly upwards for a few more days as people see their year-end bonuses, make one last withdrawal or deposit for taxes, and use the last payday of the year for crypto. There's not much news today. There's some interesting articles on CoinDesk regarding the amount of cryptocurrency hacked and scammed in 2017. Hackers and scammers netted nearly 500 million in 2017. It's crazy stuff. That will only go up in 2018 as more people enter the space. So guys, please be sure to secure your crypto. Take it off exchanges if you're not trading it. Invest in a hardware wallet if you have a significant amount of cryptocurrency. Don't take chances. Don't trust strangers with candy. You know these things. There was also an interesting article about the infusion of blockchain in businesses and how that'll be a prevalent trend in 2018. This is one of the primary rebuttals I have when people assert that cryptocurrency will be banned. The big banks aren't really that threatened by it. They're incorporating it. Sure, that currently amounts to just a toe in the water, but just like how big oil companies are investing in renewable energy and big car manufacturers are starting to make electric cars, big corporations either embrace change or are run over by it. I think the big banks are starting to wake up as to how disruptive cryptocurrencies are. How they incorporate crypto will be a really interesting thing to see play out, among many other reasons that 2018 will be a whirlwind year for cryptocurrency. That's a nice segue into my pick for today's cryptocurrency opportunity, Ripple. Now, Ripple gets kind of a bad rep in the crypto space for being centralized and really pre-mined, but you cannot deny the recent gains. Today, it briefly overtook Ethereum to be the number 2 crypto, some part due to the consortium news, some part due to rumors about a Coinbase listing. It's a good time to be holding Ripple, and it might just get even better. We've seen a rumor, though still awaiting more confirmation and details, that W3C is working on a payment method spec for the Interledger Protocol, ILP, that will allow any compliant wallet or merchant to use ILP as a common protocol over any funding source or any merchant account type. Ripple introduced the Interledger Protocol, ILP, which acts as an arbiter for all types of ledgers, both those that are distributed and traditional centralized alternatives. W3C is the World Wide Web Consortium. You might know them as the team behind HTML, for example. So let's break down this news. This is hands down one of the most positive pieces of news for Ripple in the last couple months, although it doesn't seem so at first glance. Having a de facto standard for internet applications is a game changer and brings the Internet of Value one large step closer. First of all, this API is not just for XRP, Ripple's currency, it's a common API that will be used with any compliant payment method. The reason why this is huge, Ripple and XRP are all about banks and cross-border transactions, but at the same time, they are clearly working with entities and technologies that are very close to consumers. My prediction is this: based on its track record, Ripple is going to win over banks who want in on their tech. Not all of them, but enough so that it matters. Enough that banks are really using XRP for cross-border transactions. But all of this happens internally, so you as a consumer don't really see it. At the same time, Ripple works with big e-commerce players to test XRP. So someone like Amazon could handle payments to sellers by sending XRP directly to the bank, and the bank puts dollars or euros or whatever currency onto the seller's account. Again, this all happens internally, so the consumer doesn't even see it. Now, at some point, at least in parts of the world, maybe Asia, because they seem to move really fast, they're going to start using crypto to pay for all kinds of things. Maybe it's micropayments online, pay a couple cents to read this article, rent a taxi, buy lunch. If XRP already has a strong position in banks and big e-commerce players, do you really think that some other coin is going to be used for those payments? If you do, then please invest in that coin. When it comes down to it, the big e-commerce players are not going to pick some obscure coin. They're going to pick the top of the stack, whichever one has the most utility to them. So the future is bright for Ripple. We're targeting at least $5 XRP by the end of Q2 2018 as this news develops and we learn more details. But yeah, it should be a great time to buy Ripple.
Hi guys, this is Doc. I'm looking at the big dog here of cryptocurrency, Bitcoin. So the question on the table is, after all this froth that we saw, this parabolic run-up that we had into mid-December, now we've come down, we've gotten our requisite 40% correction on Bitcoin. So now what happens from here? Is this just going to keep on going higher? Or what do you do to make a decision in terms of whether or not you hold this or whether you whether you consider trading it out and swapping it for another coin. Well, a lot of this depends on whether you consider yourself a trader or whether you're an investor. Now, a trader is going to look for periods of extremes, right? They're going to look for extremes and they're going to sell into strength. You're going to sell into strength. You're going to sell into these extremes, whether or not it's a horizontal price level or it's going to be an actual technical level. I tend to use the choppiness index to provide a lot of these. However, there's a lot of other tools that we could use as well too, such as the Bollinger Bands are really good for this type of work, where if you get the price popping outside of one of the Bollinger Bands, then this represents an extreme in terms of volatility, and that is normally a very good place to sell into in terms of strength. If you're a trader, remember, if you're a trader, if you're an investor, you're not going to do that. Now, an investor, what the investor might do is the investor might look at the opposite side of this to add to the position as the price goes to the opposite side of the Bollinger Bands. So again, a trader is just going to be looking to, add at extremes in value and sell at extremes in value as well too. So that's the goal of a trader, is to get in when things look most pessimistic and sell when things look most optimistic. So that is the contrarian kind of life of a trader, which is actually going in the opposite direction from most of the herd. However, the investor is going to be looking for periods to add to positions. But at the same time, I believe even if you're an investor, the goal is not to ride this thing down to the ground like Slim Pickens in Dr. Strangelove. The whole point here is to have something in mind in terms of your value to say, look, this is the bottom line. If the price goes below this level, I no longer want to be an investor in this particular asset. There's probably something else that I can put my fiat currency into. Now, there's a lot of different ways to do this. Some people use things like the death cross of the 50 and the 200-day moving average. That's certainly viable. So you'll end up selling out when it's going through a major correction, but you may not want to do that if you're an active investor, right? So one of the things that I found to be very reliable is looking at price action. And price action, if you look at something on a monthly chart, so this is a big time, long-term view on an asset. And what you're going to look for on this is a monthly lower high setting up. A lower high prints, and at that point, if it confirms as a lower high and a lower low, then you have a change in polarity on the monthly chart, and that's not a good thing. That's where you want to be out of that asset, because that asset is now going into a bear market. Save your money at that point. So as you might imagine, though, the problem with this technique is that there's just not a lot of assets that are out there that really have a monthly chart available to them. So Bitcoin certainly does. Litecoin doesn't have that many months under its belt. Something like Neo barely has any time left. Omisco, Navcoin, things like this. Navcoin's been around for a little while. But again, that whole sense of a monthly lower high is going to be your trigger. If you're a longer term investor, that serves as your bailout point if that does occur.
So thank you very much for watching. If you enjoyed the video, please click on that like button. And if you're new here and want to continue to receive high quality crypto analysis on a daily basis, by all means hit that subscribe button and be sure to hit the bell next to it to be notified when we release new videos. We're also putting out a daily newsletter, so you should definitely look out for that in the description below. Have a good one, guys. Peace.